Yo, what's good? I know y'all seeing a lot of videos out here where people are talking about how the market is down and crypto is down and is a housing, is there a bubble, is it gonna burst? And everybody talking about negative, 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 red, red, red. Everything is down. We losing money, we losing money. I'm about to give y'all some free game. You know how much money I've lost in the stock market this year? Absolutely nothing. Now I know y'all thinking, how the hell you ain't lose? How you ain't lose nothing in the market? How did you not lose any money in the market? Hell, I saw you do a video where you showed us how much your investment with portfolio was down. Hey, that's true. I did show y'all how much I had presumably lost. I did show y'all how my investment portfolio was down, but I did not lose any money because I haven't sold any of my assets. I haven't sold any crypto. I haven't sold any stock. You don't lose or gain a realized profit until it's time for you to sell. So I didn't sell it. I didn't sell anything. I got everything. I'm actually adding to my position with Pfizer, with Realty Income, with Apple. I've been adding to my position because that's what I do. I'm looking at selling 15, 20 years from now, not 5 months from now, not 20 days, not 32 days from now. So with that being said, you know I like to look at the data, and in today's video, we are going to check out how does the market recover, how fast does the market recover after it bottoms out, after we reach the lowest of the low, if it's a recession or whatever it is. How fast does it take me to get my bread back? How fast will it take me to recoup those losses? Let's take a look at the data. Let's get it. I'm Marcus. You're at the channel The Debt Free Dad, where we're chopping it up, talking about financial education and financial literacy, but we're also following my family's journey to become first-generation millionaires. We're currently tackling our student loans. Hey, attorney, licensed attorney, not your attorney, not financial advice, not legal advice. Get out of here. Go see a professional if that's what you need. Over here, the views and opinions expressed in this video are that of the debt-free dad and does not constitute advice, but are for entertainment purposes only. I like that. That was a good little disclaimer I threw out there. There's also a disclaimer in the bio, so you know y'all can't come for me, bar association, because your boy did the disclaimers. Now, anyway, let's go ahead talk a little bit about the numbers. Everybody's talking about the R word, recession. Everything is just looking scary and gloomy. And so people have a question like, hey, how long does a recession last? Like, how long are stocks going to go down, and how long can it take me to make my money back? Well, the honest answer is the answer that any attorney would tell you to any question you ask about anything is it depends. It depends on what sector you invested in. If you invested in tech versus if you invested in fuel and energy companies, if you invested in war defense companies versus if you invested in companies that make food products like Kraft and Oscar Mayer. Oscar Mayer is a product of Kraft, but y'all know what the hell I'm talking about. So the honest answer is depends, but we are going to take a look just at the numbers. So y'all know when we look at the numbers, I'm going to have to put something up on the screen and pull out my phablet. My phablet is a phone tablet. Okay, so I'm going to go ahead and throw this image up on the screen so y'all can see it. Hey, shout out to my guys over there. I actually think they have a great channel. I think they're probably my favorite overall channel to look at on finances. The Money Guys Show. Y'all should go check those guys out because they provide a lot of data points. They have a lot of charts and things like that that can give you the data and a visualization that makes it something that you can easily digest, so to speak. So look, the average length of the average bear market. Bear market is when it's going down. Bull market is when stocks are going up. They track the S&P 500. S&P 500, Standard & Poor's 500. 500 of the biggest companies in the U.S., which is often used as the litmus test for the U.S. economy, how things are going. The average bear market lasts 13.8 months. So we've been losing stocks now since, I don't know, March, maybe. You know, this was like this first half of the year was the worst year for the stock market since like 1972 I think what I saw. So right now we're in a bear market. Stocks are pulling back. The average length of the bear market is 13.8 months. That means for a little over a year, stocks are going to go down in any given 10-year period. That's just kind of what it is. The average loss is 34.99%. That's a big ass loss. I'm nowhere near 34.99%. But let's take a look. This is where it's key. Let's take a look at the rate of return after the stock market hits its bottom. After people identify this as the ground floor, bing, everybody off the elevator. After the stock market hits its bottom, within 1 month, you make 14.76 return. Within 3 months, you make 21.3% return. Within 6 months, you make 27.81% return. And in 1 year, you make a 43.51% return. Think about it. You lost 34% in 1 year. And then in the next year, you gain 43%. So the market historically turns around really fast. So what does that mean for you all watching this video? It means have a little bit of patience. Like if you're 62, I can see why you would really be panicked and concerned because you probably need that money. You're at retirement age or you're nearing retirement age and you want to preserve your capital. I got it. But if you got 5 more years in the market, 10 more years, 20 more years in the market, just chill out, take a chill pill, relax. If you've been making smart investments into things that you understand, you're probably going to be okay. Again, I'm no financial guru, but I feel fairly confident that I can ride out the storm 13 months. I mean, let's be realistic. It's not like I'm investing money that I need to actually pay my mortgage or the energy or the gas bill. But those were the numbers. Hey, you can lose a lot during the bear market, but on the rebound, once it hits the bottom, you see how fast things recover. So a little bit of patience in uneasy times like this can go a long way. As always, I appreciate y'all tuning in. If you like this video, you're definitely going to like the video on the screen. Y'all be easy. Peace.